Good day to one and all. This is Dr. Sivaraman of iknowindices.com. Hope you are able to hear me. And I am very happy to give the webinar here when FX Street is celebrating its 10th anniversary in a grand fashion in Barcelona. And ITC is going on in a very big way. So let us also try to track the market and see what sort of trades we can do. Those who are not in a position to participate in this ITC, probably we can have a small discussion about the forex market, how exactly we can track the market and also learn to trade effectively. So tracking the forex market together, part 1 on October 22nd between 9 and 9:45 GMT. It is a simple market tracking technique using the live market code page. I'll give the link for the same. You can open it in a browser. And I will also focus the camera over that of the live market code page and we'll see where exactly the currencies are currently. Euro is currently trading around 1.3893, 1.3895. The low is 1.3858. And they made a quick downward stop and during the start of the European session, which would have created a lot of fear among that of the traders that they could drop instead of the rise for the weekend. And in fact, towards close of the Japanese session, they made the rise to 1.3970 and they cut the initial high also. So you find either way they are doing the stop ends, and currently the net change you come across is 26 pips. And why this sort of wide range swings are happening in the market? Because the leverage is reduced in years. So normally when they come across say for example 100,000 K orders, probably it will be just half of it now because the leverage is being reduced to 50:1 in the case of majors and 30:1 in the case of the crosses. So obviously in the reduced volume, the orders will be spread all over in a wide range. So the players need to definitely make a wide range swings in order to hit the stops. So it will not be the cluster of stops below that of the low or above that of the high and things like that. They may have to go about 50-60 pips on the lower side and 50-60 pips on the upper side and try to hit the stops and earn the money. So that will invariably appear that the market has become suddenly volatile, and that is a causal factor for that. So you have to tune your trading strategy accordingly so that you will not be vulnerably caught, and also see that you are not over trading. That may be very dangerous in the current volatile conditions of the market. In the case of GBP, it is trading around 1.5659, 82, and low is 1.5659, the high is 1.5748, and the net change is 20 pips negative. And in the case of yen, the net change is 6 pips negative. So you come across that yen is making a very narrow range of swing and not making either an upward stop or a downward stop. That sort of scenario is seen in the case of yen. And USD CHF, it has gained considerably, about 73 pips positive net change is seen when euro has dropped only about 27 pips. So now you can understand that they are gaining more in the case of USD CHF when compared to that of the euro drop. So because they have been consolidating CHF at the lower level for a long time and quickly they wanted to gain the levels. And similarly in the case of Canadian dollar, 1.0288, 1.0292 are the current levels, 1.0237 is the low. They made a downward stop initially and subsequently they are gained to that level of 1.03, about 22 pips positive net change is seen. And also in the case of Australian dollar, 4 pips positive net change is seen. So I already explained, whenever you come across the commodity pairs, both the pairs are showing positive net change or a negative net change, then you know that they are handling the crosses. So Canadian dollar is showing positive net change of 20 pips. Australian dollar is showing a positive net change of 4 pips. So they are holding Australian dollar in the middle level and it has not weakened big, but they are showing positive net change. So you come across the confirmation of the contrarian moves that Euro, GBP as well as CHF are showing negative net change. It's a confirmation of a contrarian move, and also Canadian dollar and Australian dollar. They are showing positive net change. It is another confirmation of a contrarian move. So first of all, you have to identify what sort of moves the players are trying to do, and then subsequently we should come for that of the trading. So let me show the initial lows and the highs set for today briefly. Those who have been tracking me will be able to understand how exactly the initial lows and the highs which are set between 2:30 and 3:30 GMT on a daily basis. If you make a note of it, we'll be able to really understand how far they have taken the market. So in the case of Euro, 1.3890 was the initial low, and they breached and formed 1.3858 as a new low, and currently trading around 1.3897, and they come above that of the initial low. So there is no fear, because a lot of people just ask me whether Euro will be able to go up or not and things like that. So they made a quick downward stopping during the early European session. For the session start, they are expected to do here afterwards volatile moves. So keep that in mind and trade accordingly, and make use of such volatile moves as the trading opportunities for you. So they come above that of the initial low. Similarly, they cut the high, initial high, 1.3932 was the initial high, and they went up to 1.3970. So you can understand how they are making alternatively a downward stop and the upward stop and trying to earn from that of the traders. So as traders, whenever they are making a downward stop and try to buy, whenever they are making an upward stop and try to put profit, that sort of trade we should aim for. In the case of GBP, 1.5694 was the initial low, and they breached the low and formed 1.5659 as the low, about 35 to 40 pips below that, and they are now trying to come up, and it has come to already the level of 1.5696 and 1.5700. So they made again a downward stop, and in the case of GBP and come up, which would have created the feel that GBP does not have the strength to go up at all, and you will see very soon that GBP going up in a very big way, giving the surprise to the traders. You know that yesterday and early part of this day, they have been handling Euro GBP. Mainly, they have taken to the level of 0.89 in the case of Euro GBP and induced the people to do the short covering, and subsequently they had dropped Euro GBP to that level of 88.61 and came to the low of 88.49. You come across just 0.00 net change in the case of Euro GBP. So they have gained the levels in the case of Euro GBP and just offloaded their positions, and they will let loose Euro GBP. For that, they have to gain quickly the levels in the case of GBP and slowly gain the levels in the case of Euro. We have seen so many times, but still the fear or the uncertainty will be lingering in the mind for many of the traders whether GBP can go up and things like that. In the case of GBP also, 1.5732 was the initial high, and they breached and formed a new high, 1.5748. I'm just referring to that of the initial lows and the highs, and also the current live market code page for you to show that they had done the downward stop and as well as the upward stop. In the case of CHF, 0.9661 was the low, and they have not breached the low, but the high they have breached, 0.9713 was the initial high, and they have gone above to 0.9776. Then in the case of yen, as I have been explaining on many times, that it is in the subdued sideways move. The 81.17 and the 81.36 are the initial highs and the lows, and they are not. They have breached only the low. Briefly came to that level of 81.00, and the high they are not still breached. Then in the case of Australian dollar, 0.9774 was the low, and they breached the low and formed a new low, 0.9759, and then subsequently it has come about to that of 0.979093 currently. So you can understand there was a brief downward stop, and and the high was 0.9792, and they have gone to the new high of 0.9852. So you can understand that in all the numerator currencies, they had done the upward stop and then downward stop and they are going to do the upward stop again. And then the upward stop will be an extended move and they are expected to gain the levels. In the case of Canadian dollar, 1.025 was the low and they breached the low and formed a new low, 1.0237. That is, you can see it in the live market quote page. And 1.027 was the high, and that also they breached, and 1.0300 has become the new high. So now you can understand how they are changing market condition. So depending upon the market condition you have to trade. So earlier they used to cut only on the higher side or on the lower side, but now you will come across on a daily basis, they will make a downward stop and an upward stop and alternatively in alternate sessions. So keep this in mind and plan your trades accordingly. So let us also keep that in mind and see how exactly we can track the market and try to take the position. So before taking to the positions, you need to understand, those who are not familiar with that of the market timings, which the players follow. 00307 GMT is the Japanese session, 7 to 7:30 is the gap time. European session starts by 7:30 GMT. We are currently around 9 GMT, about 1.5 hours after the start of the European session. So the first 1.5 hours is the early session. Then subsequently you come across, you will come across the daylight saving system will get over, and from end of October and first week of November you will come across the new timings will be followed, and during that particular time I'll display it in the blog as well as during the webinar time. I'll give you the timings of the market and they are all available in my trading system webinar also. You can follow it. Then US session will be from 13:30 GMT, and today I'll be giving the part 2 by 14 GMT, review what are the trades we are trying to do now and what is going to be the impact of such trades or what is going to be the result of such trades we will be seeing. So normally the basic trading strategy I've been explaining many times, and those who are joined recently can just, I'll go through it quickly. Watch the forex market in all the 6 pairs, 4 majors and 2 commodity pairs, for 30 minutes from the start of the session. So up to from 7:30 the European session starts. So by 8 GMT you can just see whether they have breached the low or they breached the high, and if they are not breached, then you can go in for a basic trading strategy and try to take a buy position near that of the low. In the live market quote page, what you see as the initial lows and the initial highs you can make use of and try to take a buy position near that of the low. And if they are not breached the high, then you can take a sell position near that of the high. Today, you have seen they have done the upward as well as the downward stop end. And so, how to define a stop end? The stop end shows the reversal within 30 minutes, whereas an extended move will be for 2 hours. So they are just reversed in 30 minutes. So we conclude that it is a stop end. So after a downward stop and they wanted to make an upward rise or a spike, and after that upward move they had dropped it and continuously dropped and made that downward stop and today during the start of the European session. So if you understand the overall moves for the intraday, then you will not develop the fear or uncertainty. You will know, okay, the next they wanted to do is an upward rise and an extended rise. And that is how the sequence of moves happen in the market. So once you have taken the position, whether your reading is correct or wrong, we cannot take unlimited risk. So obviously you have to keep 30 pip stop or a hedging order. The hedging facility is available. And once a position makes profit, whether you are using a hedging or a stop, try to move the stop to that of the entry point and remove the hedging order so that you don't incur any loss in the event if they drop the market further, so that you will be unhurt. And when they give a better opportunity, in case if they hit your stop and show lower level, you can easily enter a buy position at a lower level rather than simply holding the position and praying to God that I expect the market to go up, and asking various analysts whether it will go up like this. So you have to discipline yourself, and you have to see that you are taking the minimal risk and try to maximize the profit by keeping a limit of 45 pips or 75 pips, or you can take the limit away from that of the market, but you should not take the stop away from that of the holding position. So once you find the going is good, you can just trail the stop which is kept at stop at entry, and you can just move the limit away from that so that you can maximize the profit. So this is the basic trading strategy, and the expected market move for this particular session I have already given it in the blog, and also you can see it in the blog, my trading system, and market reading blog. Today Euro and GBP are expected to swing and rise during this particular session. They are expected to make a spike. So let us see how exactly they are going to do it and what reason or an excuse they are going to use it. We do not know about it. But they use any sort of attribute to just gain the levels or drop the levels, and don't think that they need always a data to trigger the market, and without a data also they can just straight away gain the levels or drop the levels. So now you would have seen that around 8 GMT data was released from that of Europe. The data was positive, and many thought that they will rise it, but they dropped it, and subsequently now they are rising it. Probably they have taken a longer time to digest the data was good. So this is how they will try to fool the traders. So you should not become victim to their act, and we should smartly analyze and see, okay, these are all the cunning points they are trying to express in the market. So let us trade calmly, watching their move, because whatever the hidden agenda, they have to reveal it in the market. They cannot keep it as a closely held card. They have to expose it so that we can visualize it and trade accordingly. So I explained that they made the downward stop and then subsequently gained the levels. So anyhow, the webinar started late, so it is not by 8 GMT, it is by 9 GMT. So obviously, you find that whatever the prevailing level, you should be able to take the position. Probably I'll try to fine tune the level. So currently Euro is trading around 1.3912, 1.3914. So I'll try to keep 10 pips below that, a limit by order. Just 10 pips below, a limit by order 1.3902 with an entry stop of 30 pips. So if they don't fill it in another 10 to 15 minutes, then I'll try to modify the order and try to take the position at the market. So this is how you can fine tune the orders when, as soon as you find a great opportunity is there in taking a buy position, probably there is a potential to go up. Whatever be the type of study you come across, you can always keep a limit order just 10-15 pips below the market and see whether they are filling it or not. And if they fill it, then fine. If they are not filling it, you are able to understand that they are supporting it well and they wanted to gain the level, then you can try to modify and take it to the market. So without a hurry, you will be able to take the position that can really give you a good profit, rather than simply take the market order and later on feel that I could have just waited for another 10-15 minutes, they would have given it at a lower level. That sort of repenting feeling we need not do. Then in the case of GBP, 1.5690, 1.5696 on the current level. So I'll keep a buy limit 1.5680 and just see whether it is getting filled with an entry stop of 30 pips. Then in the case of CHF, they have already taken it higher level and then they have quickly dropped it from there. So 0.9730, 0.9733 are the current levels. and 0.9776 was the high. So they have started doing the wide range swings. If you see the spread between the low and the high has become 100 pips in the case of CHF. So this is how they try to do the wide range swings and then subsequently take away from that of the range trade. So we will try to buy out of the initial high. The initial high, explained it, 0.9716 was the initial high. I showed it. That was set during that of the between 2:30 and 3:30 during Japanese session. So we will try to keep a buy order around 0.9720. So 0.9717 was the high. They breached the high and sustained above that the high for more than 30 minutes to 2 hours. They are just making a drop, and if they don't go below this particular 97.17, then further downside is limited and they are expected to gain back again. So you'll be wondering that I am buying it in the case of Euro as well as in the case of CHF. That is how I explained it while reading the live market code page that they are doing the contrarian move. So when they are making a contrarian move, now also you can see that Canadian dollar as well as Australian dollar, both are showing positive net change. That means they wanted to make the contrarian move. So we have to do a contrarian trade. Go along with that of the players. With an entry stop of 30 pips. Then yen, I am avoiding it because ultimately we are trying to trade only to make money, and if there is no scope of making money, then just ignore that particular currency. Then Australian dollar, currently trading around 0.9792 to 0.9795, and the low is 0.9759, and they are in the middle level. So we will try to keep, because in tandem with that of Euro and GBP, they are expected to gain the levels in the case of Australian dollar. So we will keep a buy limit order. Actually, we should have taken a buy order near that of the low, but still it's fine for a demonstration purpose. I will just show it to you that if you understand the direction clearly, even if you are trying to buy it slightly at the higher level, no harm. As long as the position is taken, you should be able to see profit in that. So instead of booking 75 pips profit, we can book 50 pips profit. But ultimately, you should make profit. That should be the objective. So buy limit order. $0.9788 with an entry stop of 30 pips. So here everywhere you can see that I am keeping, in the case of majors, 30 pips entry stop for the simple purpose that we do not want to take unlimited risk, and we will be just taking the position and taking a chance for 30 pips, however great you might be in market reading. So because you know that the players are much more smarter than us, and we are all human beings. We use our intelligence, but the players use their money power. So there is a difference, and they make decisive moves in the market knowing well where exactly the stops are. But whereas we are not able to see all those things, but still we try to use our intelligence. So there could be a limitations to us. So we cannot afford to lose our equity. So we have to necessarily keep hedging order to limit the risk, or a stop if the hedging facility is not available. So USD CAD currently is trading around 1.0280, 1.0284, and they come above that of the high, and 1.0270, and so we will try to take a buy position. 1.0280 with an entry stop of 30 pips. So this is the only position immediately taken. And if you see that still they are not filled euro, so let me just try to take a position. around 1.3913. It becomes a position now. Because they are not making a dip. Then in the case of GBP, they have come up to 89. So let me just modify and take it. Then in the case of CHF, they are not coming down. So let us wait for some more time. And if it is not coming, then I'll convert it into position. It's about 12 pips from that of my limit order. In the case of Australian dollar, it has come to 97.92. So probably wait for another 2 minutes and see whether they are filling it. Then in the case of Canadian dollar, they have taken already a buy position, 1.0280. Okay. Now these are all the positions I have contemplated. I am not just going to take positions in the case of cross, probably Euro GBP. I'll just show it one because a lot of people are trying to trade Euro GBP nowadays. And you find that Euro GBP has got a high of 0.8878 and currently it is trading around 0.886366. 78 is the high. So we will keep a limit order. Sell limit just about 4 pips below that of the high, 0.8874 with entry stop of 50 pips. Because I explained that in the case of Euro GBP, because they are focusing more on Euro GBP because of the value. And because of that, they are trying to do more of a contrarian move nowadays with regard to Euro and GBP. So I am contemplating to take a sell position here because it is closer to the high and not reach the high. And yesterday's high was slightly above 89 level. And afterwards, they are not gone above that of 89. So it was very evidential that they made that upward move to induce the traders to do the short covering. And they just were holding around 88.75 and just building sell positions. So obviously they wanted to let loose. Then you could come across more drop in the case of Euro GBP. So I am trying to take a sell position and I am not overconfident. So I always try to keep stop once a position makes profit. So I don't trade with overconfidence. I trade with confidence. And I also limit the risk by keeping stop at entry. So however smart you might be, you cannot just hold the position and say that I am mentally strong. I can hold a position making about 500 pips loss, 600 pips loss. That does not mean that you are great or you are rich enough to hold the position. You know, your usable margin is very limited as small traders. So obviously we have to limit the risk by keeping stop somewhere, whatever be the determined level of stop, you try to keep it in order to avoid untoward things to happen. And once the position makes profit, move the stop to entry and see that you are not taking any more risk in that particular trade until such time you close the position. So I just converted the positions, limit orders into positions now. 1 or 2 pips up and down moves might be there, and there could be a variation with regard to that of the live market code page and the platforms. So you can similarly fine tune in the platform also. Whenever they are showing red orders in the bid and the ask, you can understand that they are making a small dip, and when they stop particular level, you try to keep there the limit order, they will fill it. And so that is how you can fine tune your orders also. Whenever they are showing green, use it for your selling purpose. And continuously when they gain the levels by showing green, see that they have stopped gaining the level. Only then you can take sell position when the new high has not been breached for more than 30 minutes to 2 hours. So entry is equally important and similarly the exit also. And many people just use all the analysis and try to decide about the entry. and later on they are under the grip of emotion. When the going is good, when they are not being stopped out, they do not want to exit out of the position. And you have to understand, when the players are exiting off their positions and again revisiting the levels, what is the greatness of simply holding the positions? So we have to understand the exit is also equally important. So for that, you have to use the trailing stop when the position is making profit and try to keep up with 75 pips limit order. And you know that there are limitations with regard to market, and you have seen on Monday they raised in the case of Euro about 200 pips, about 150 pips in the case of GBP. So around 100 to 250 pips or sometimes 200 pips they can rise. So try to keep a limit order of 150 pips of the net permissible level or following the net change, and then try to trail the stop. Whichever is hit, you are lucky enough. Either with the trailing stop a minimal profit, or the limit where you are kept with a maximum profit. Once the position is closed, look for another trade next day, and they will keep visiting the levels. They cannot straight away rise to infinity. All the currencies or drop it to zero. So you have to understand that the players are also traders. And if they continuously gain the levels, the traders will run away and the players cannot earn any money. The entire process of making volatile moves in the market is a money-making process for the players. So that you have to understand that they are not gods just to show the unimaginary levels, etc. So let me minimize the PowerPoint presentation and focus the camera over that of the live market code page and take the questions which are asked here. Okay. And Robert, do you see Euro USD going lower, and if so, how much lower you see is happening intraday this morning? No, everybody is asking about the levels. Here I am just trying to explain more about the how to track the market, following the type of moves and using the live market code page, and what could be the next move. We should be able to derive it. And if you focus on the levels, then invariably you will find that you develop the mental block with regard to the level. Suppose if I give you that Euro could go up to 1.41, immediately, when you're holding a position 1.39, you will be thinking all along about 1.41. When it goes up to 1.4089, you will not feel like booking profit. Now, there comes the biggest problem with regard to focusing on the numbers. You try to follow the moves and they just gain the levels, and yesterday also they gained the levels up to 1.4055 and then dropped. So you should be able to understand how they establish the levels. The levels are being established wherever the stops are clustered. So it is not a hard and fast rule for them to go up to that of the psychological level. And they can just like that reverse it when the traders started taking the highest level long positions, thinking statistically that it could go up for the high. Then they will make a quick drop. So you know that last week, and all were bullish. Every analyst were bullish in the market. So when all turn long in Euro and GBP, do you think the players can continue to rise and philanthropically give profit to everybody? No, they made one quick drop on Monday, Tuesday and created a panicness among that of the traders, telling that China has increased the interest rate as if China is greater than US with regard to the interest rate decisions. And then subsequently the very next day they reversed it. So now you can understand they can use any sort of rumor or any sort of interpretations and make the moves in the market. So you have to understand there is a limitations with regard to the market moves. When the herd of traders continue to think that it will go higher, they will try to show a lower level. But induce or create the uncertainty, and when the traders desire to sell, then they will try to go up. So the long-term call might be correct. But short-term calls, we need to understand that they are trying to focus on hitting the stops and earning money from that of the traders. And they are not ready to give the money freely to that of the traders unless and otherwise you trade along with them. They are expected to gain the levels. Now you see Euro slowly gaining and GBP is also gaining. CHF have not taken the buy position, but it has gone up. So let us just wait. When Euro and GBP are rising, probably they might make a small dip in the case of CHF. Then we will get a definite fill. Then Collab. Do you think that the leverage cut effect may be so big, only implemented in USA, and the futures margin not changed in FX? I believe so. Doubt this is the cause of higher volatility. G20 meeting causing nervousness. See, don't think too much about this G8 and G20 and things like that. They will do hardly anything for your trading purpose. No, everybody will be just making a hype about all those things. There are so many such meetings happen every time. Have anything concrete happened in that? And they have their own ideas, they have their own understanding, they have their own negotiations. They are not worried about the traders. Please get away from such ideas. Probably the news people try to exaggerate and try to attract the traders. So G20 is going to be there and there is going to be a vital decisions and things like that. Have you not seen earlier G20 meeting happening and what sort of moves happened in the market? So any talk, if they say that Bernanke is going to speak, so it is going to have an impact on US dollar, probably for about 10-15 minutes. Afterwards the players will move on their own way. So don't be moved with such ideas. Then it will be very difficult for you to understand or read the market. Now, I have given a very simple example. Before your eyes, you have seen that European data was good and then subsequently they made a drop in the case of Euro. Now they are rising it. What makes them to rise Euro? Now you tell me. Is there any data or is there any speech or is there any other trigger? So this is how they create the moves in the market. So this you should be able to read or foresee beforehand. Otherwise it is very difficult to sustain in the market. And with the reduced volume, because of the leverage reduction, obviously the volume will be reduced to 50% to 40% to 50% in the market, because some of the traders might go away from the other market because in the reduced volume they may not afford to keep that much of usable margin to trade in the market. So obviously many of the accounts would have been taken out. So you have to keep it in mind. So whenever there is an impact of this nature, and many of the traders will become cautious and they want to enter into that other market after understanding how the new system functions. Not that everybody has got that risk appetite all the time. There are many cautious traders, there are sensible traders, and they are not addicted to trading. They give the break for trading and just understand the system, then subsequently enter into the market. So there will be a reduction, and also the institutions will also be cautious and see what is going to be the impact of this, and later on only they are going to commit more. So obviously when the orders are sporadically distributed in the market in different levels, the players need to make very big volatile moves in the market. And it is going to be the order of the day in future, because a similar situation was seen in 95 to 98, 99 time, and when the hedging was not available and the leverage was very reduced and online trading was introduced, and we have seen the volatility like 500 pips to 800 pips in a single day. USD CHF was such a virulent currency at that time. Even the Singapore dollar was considered as a virulent currency at that time. They used to make about 300-500 pip swings on a single day. So we could come across, now they have started making such moves. In the case of Euro, on Tuesday they have made about 500 pip, 300 pip swing in the case of Euro. So we could come across in the GBP also very similar things, and there are days when they had done about 500 to 600 pip swings in GBP. And today I'm expecting an upward spike. Let us see. As per the algorithm, it may come true or not. But still, let us watch how exactly they are taking it. Then New Age. Further to Carleb's observation, the number of clients for each of the online platforms are not too large as disclosed. Yes, that is a reality, and don't think that suddenly they got reduced. This is the actual thing. See, the number of clients with regard to many of the trading platforms are very less, and understand that not many of the institutions are using the online trading platforms, and they are only going to that of the banks. And online trading platforms have got only the small traders predominantly, and they say that they have got a lot of institutional traders and things like that. They are all just to say attract the traders. And understand that they are not, the online trading platform providers are not the direct, they don't have a direct control over that of the market. And they get the feed from that of the banks. So whatever the banks say, they have to dance according to their tunes. And when the banks make the upward stoppant or if they make the slippage, etc., the platform providers need to accept all those things. They cannot question the banks, otherwise the feed will be stopped. So it is very difficult to get a reliable feed nowadays for any platform provider for that matter. Then 3, can be long euro at this level. That's what I just demonstrated here in my live trading decision. But still, keep stop to limit the risk. Don't take undue risk. Then call up. Following the rule of European gap time 7 to 7:30, low is between 38.96, has not cut the low at 38.88, and consequently, we should have bought around 39, put 39.30, yeah, obviously. So, when they are not breached the low, you can just take a buy near that of the low, and you can just keep stop at entry and try to ride over that of the profit. And also I explained many times the gap time trades. Whenever they make the upward move, you just try to take a sell position during the gap time, and first 30 minutes they will make a drop and try to close it. Use hedging order to limit the risk when they are trading against the trend. Then New Age. As the initial high on Euro USD is so close to that of the current price, why a buy order? Is that technical trade? I am not trying to do a technical trade. It is basically they cut the low and come up above that of the initial low. So obviously it is a basic trading strategy after a downward stop, because the time is 9 GMT. It is not 30 minutes from the start of the session. So imagine that I had taken a buy position and that was closed using a trailing stop, and subsequently I am re-entering into the market after waiting for about 30 minutes. It is not that a basic trading strategy has to be done all the time. Whenever you come across good opportunity, you can try to buy near that of the low when the low is not being breached. And that too, they have done a downward stop and come up, and they will not continuously make a downward stop. What is the meaning of downward stop? And when they had done the downward stop, and a lot of traders holding a long position would have cut that long, and technically they would have gone short. That is why they gained the level. So after the traders have turned short, they will rise the level and hit their stops. Alright. So they will not continuously drop every time and give the profit booking opportunities. They will alternatively move the market. You have to understand, it is nothing to do with technical. It is pertaining to that of the traders' sentiments or the traders' trading ideas. What is the winning ratio with this method? So I have not really estimated the winning ratio. You can just do it in a demo trading platform. See, I am not here to sell this particular idea, to just give you the winning ratio, etc. These are all the suggestions and concepts, and if you find it is working for you, then you can take it. Otherwise, you can just ignore it. Then call up. Why do you keep same 30 pip stop? No. They can make the volatile moves in the market. It doesn't mean that I can increase my loss absorbing capability. Just because they increase the volatility, if I keep 60 pips stop, and if they hit my stop, then I'll be losing $600. So I do not want to do that way in a one standard lot. I will only limit my risk. If they hit it, fine. I'll accept the small loss and try to re-enter into the market or review the market and later on re-enter into the market. So it doesn't mean that we can increase the stop. And if you are very particular, probably if you do not want to be hurt, then probably you can keep about 50-60 pips stop, but try to reduce it as quickly as possible when the going is good. And when they are not going below that of your entry level, say for example, I had taken 1.3913, a buy position in the case of euro, they are not dropped it below that, I can tighten my stop to 10 pips or 15 pips. So that is how you should do it. So the basic idea is given, you can develop from there newer ideas. See, there is no restriction that this is the rigid methodology. Okay, these are all the ideas. So we have to fine tune the idea and improvise on that ideas and try to suitably use it according to your trading convenience. Then Oshawa, in the trading strategy based mainly in European opening position versus Asia, nothing of that nature, sir. Any session from the start of the session you can watch, and then when they are closer to that of the low you can buy. When they are closer to that of the high, not breach the high, you can take a sell position. But all the three sessions, Japanese, European and US sessions, it is applicable. Sorry. Then, could you show some charts? Sorry, I don't use the charts. I stopped using the charts for the past several years because I found that by using the chart, we get a lot of emotional feels. When the candles are magnified, when the spread is lower, then it triggers our emotions unnecessarily. And I use exclusive the live market code pacer. Then draw the why a higher 50 pip stop in the case of crosses, the volatility will be relatively high, and they may just, and also the volume is less relatively, and still the volume will be much more lower. So in the case of crosses, you can keep 50 pips. It doesn't mean that you have to maintain it, and once the going is good, they are not, showing any negative or a loss condition, then you can reduce it to 30 pips, 20 pips, 10 pips, and finally keep stop at entry. Is there any potency for going to 89? See, intraday they can just go up and go down and make brief stop and above that of 88.78, or they can go to 88.79 or 82 and then drop. There are chances. Otherwise, if the traders are already holding long position at a higher level, thinking that it will go up, then they may not gain the levels at all. So it all depends, because they know very well, because they are trading against all the traders. So they know very well what are the positions the traders have got. Accordingly, they will try to make the moves in the market. But you won't be knowing all other traders what they are holding. Whether first of all they are trading in Euro GBP, you won't be knowing. So obviously we have to understand our limitations and trade. Will you take second trade if you first one hits stop loss? Yes, I enter into that of the second trade. I don't become depressed, or I don't think that I am unlucky and things like that. I'll be very happy if they hit my stop and I feel that, okay, I just only lost 30 pips. Okay, they are going to give a better trading opportunity for me, and in that trade I will try to earn much more than 30 pips and try to recover it on the day. So that is how I view it. I don't become depressed, because when you keep about 100 pips, 200 pips stop, and probably you try without a stop, and later on when they hit the stop, then it will be really damaging your reasonable margin. Then you see Aussie retrace down. No, I am seeing Aussie going up. Then DD, Joined almost the end of my question, why pound drop? Now, I have not given any reason for why pound is dropped, and they have simply dropped pound mainly to rise euro GBP, and they are expected to rise GBP now in order to drop euro GBP. That is why I taken a sell position in the case of euro GBP. Let us see how the going is during the day. Then we will understand whether the forecast and our reading have come true or not. It doesn't mean that 100% it has to come through, and there can be error. Element of error is part of life. So if there is an error, then we have to accept the loss. Keep that in mind and try to trade. Then where can one find the live market put page? I have given the link already, sir, and that link is available in this particular window. You can just note it. Otherwise, I have given my trading system webinars. There again, you come across the links. On a daily basis, I am giving Asian session live market analysis. There I continue to give the links. In Kruger, how players get to know about our stops? Are brokers giving this information? See, brokers are nothing to do with that, sir, because the banks know very well where the orders are there. They are only controlling the market, and the bankers control for that of the players. So players are not sitting in front of the computer and doing it, and they only give the instructions to the other bankers and the bank deal room people. They try to pass on the orders to that of the market, and they can visualize, and they got various means to that. And platform providers, probably they will be having only a server just to get the feed connected and nothing more than that in their office. Okay. What is the expected move for Euro and GBP for this weekend? Nothing to do with G20, but they are expected to gain levels during that of the US sessions. And I am going to come back again during US session, then we will review it. Enable. Do you think that Euro players are going to make more downward stop? And see, up and down moves are part of the game for nowadays, and they are expected to take up Euro to the higher levels. Then when we see technical trade buy above the initial high, similar to that of what I suggested in the case of CHF, you can take above the high when they sustain above the high for more than 30 minutes. Then at me, beside all the talk about currency, war and policies, and there still to be a possibility of a small traders like us to earn from the market. See, simply they use the words like currency, war, etc. and don't go by that. Market continue to fluctuate. As long as the volatilities are there in the market, we can continue to trade in the market. So that is how I view it. But only thing is we have to choose the right platform provider who are not cunning and who are not trying to grab your money as quickly as possible. Try to do very small trade and try to earn from that of the market. So I'll go back to that of the PowerPoint presentation. Questions are over. So these are all the positions, and I will try to close the positions during that of the US session or early US, during that of the European or early US session, and I'll try to show you how exactly whether the positions are closed with a profit or the loss. Then I'll also recommend for that of the US session what are the possible trades. So you can make a note of these levels probably, or I take a screenshot and see what happens to those positions also. So I don't have time to explain about hedging. That's already available in the My Trading System webinar recorded and displayed in FX Street. Kindly go through that. So I'll meet again by 14 GMT and give the part 2 of the Tracking the Forex Market Together webinar. That will be the early part of the US session, 30 minutes from the start of the session. So we will track the market again and continue to track and see how exactly the market is able to give the profit for us. So always keep in mind that currencies are tradable and no sentimental attachment to that of the currencies. Wherever you come across the trading opportunity is there, you try to focus on those currencies. That is why I skipped Japanese yen, because when the fluctuation is not there, there's no point in taking a position and expecting BOJ to intervene all the time. So keep that in mind. Thank you one and all. See you again by 14 GMT. Thank you.